Hello everyone, welcome back to my YouTube channel. So today we are going to talk about a topic on US tax structure. This video might be a little bit longer than our previous few videos because we will get a complete overview of the income tax of US tax structure, in particular with the income tax related. So before I move to the topic and before I start speaking about the topic, I would request all of you to do subscribe my channel and hit the bell icon to stay updated with the latest sales tax and tax information pertains to US taxation. So let's move back to the topic. Now you can see this is a little chart type I have made here. So basically, when we talk about the US tax structure, there are two things that ultimately came. In fact, not only US tax structure. When we talk about the tax structure in general, there are two type of taxes that we normally speak about. The one is the direct tax, another one is the indirect tax. Direct tax, it's always income tax, and indirect tax is always sales tax. Now for the sales tax, we have already made several videos on how to file the sales tax returns for different US states. Still there are many topics related to sales tax which I'm gonna make videos on those topics later in the future, like for example audit, like for example resale certificates, exemptions, like for example how the uh, tax softwares works, like Avalara, OneSource, which software is the best for your business, and it also depends on your business needs. So all of these stuff is a separate, and it requires more information. So it is all pertains to sales tax, but for now my main focus is on income tax. Now when we talk about the income tax, in particular to the US tax structure, income tax is always progressive tax. So what I mean by progressive tax is, progressive tax means higher the income, higher the income, higher the tax. The more you earn, the more you will pay the tax. Now sales tax is not a income is a sales tax is not a progressive tax. Sales tax basically it's a regressive tax. So what do you mean by regressive is that doesn't depends on your income. It's a fixed rate. You have to pay the same amount of tax whether you are earning $100, whether you are earning $200 or $10,000, because it's a fixed. And sometimes it even go vice versa. For example, lower the income, higher the tax, and higher the income, lower the tax rate. There are different scenarios in which this happens, but for now let's talk about of income tax. So income tax is a progressive tax. The more you earn, the more you're gonna be taxed. Now when we talk about the US income tax, now for the US income tax, it is charged on two levels. The one is the federal level, where the state, sorry, not the state, where the government at the federal level will tax you, and another one will be the state level. Now 90%, if not 90%, 85% states do have the state level tax. There are few states where there's no state level income tax. Remember, I'm talking about the income tax now, not about the sales tax. So 85% are the states where there is a state level income tax. There are only 15% of states where there is no income tax. So which states are those which don't have the income tax? So these are basically Alabama, sorry, not the Alabama, yes, not the Alabama, sorry, Alaska. Alaska is the state where there is no state level income tax. Florida, then there's Texas. Texas is also the state where there is no state level income tax. One example would be South Dakota. Another example could be Washington. So Washington is also a state where there's no state level income tax. And when we talk about those states which do have the income tax, these are, for example, Alabama is the state, uh, Arizona, like Arkansas, North Carolina, New Mexico, New York, California. So these are all the states which do have the state level income tax, and these are the states which do not have the state level income tax. Now that's the federal level and the state level. Now the next part is how many type of taxes are there. So basically there are two type of taxes. The one is the individual tax, individual tax. The second one is the, sorry, my mistake, individual tax. The second one is the business tax. There are other taxes as well, for example payroll taxes, capital gain taxes, but for now my more focused is on the basic tax requirements, basic tax structure. So individual tax, and then we have the business tax. Now in individual tax we have 1040. Remember one thing which is very important, if you are interested in becoming the tax consultant for the US tax in particular, so this is 1040. This is not 1040. You cannot say 1040, you cannot say 1040. The actual form, the name of the form is 1040, 1065, 1099, 1120. These are the forms that you are gonna do. So first is a 1040. Now what is 1040? This is basically, it's an individual tax form. This is the form that an individual will fill while reporting his individual tax. Now in the bottom of this chart here you can see 1040 NR. Now what is the difference between both these? So 1040 NR basically, it's a non-resident alien. So what is mean by this? So for example, if you are an individual who is earning from the US, from the US businesses, or providing any services to the US clients, but you are not the resident of the US, then you will file a form which is 1040 NR. You are not going to fill the form of 1040, but you will be filing the form of 1040 NR. Now for example, if you are a Canadian person, if you are a Canadian resident, and you are doing some, doing some, providing some services to the US clients, or working remotely for a US based company, then you are going to file 1040 NR to report your income, to report your credits, to report your income, expenses, each and everything in 1040 NR. The second one is 1040 SR. Now 1040 SR, this is a form which the senior citizen will file. So what I mean by senior citizen is aged above 65 years. Whether you are equal to 65 years or above 65 years, you are going to file 1040 SR. So SR stands for the senior resident, NR stands for the non-resident alien or non-resident US. So SR stands for senior citizen. So if your age is above 65 or at 65, you are going to file 1040 SR. Now the question arises, what is the basic difference between 1040 and 1040 SR? So remember one thing, there is no difference between 1040 SR and 1040. The only difference is the format and readability. This is only the difference. Ultimately both forms are same, 1040 and 1040 SR. The format is a little bit different and the readability is a little bit different because of the aged, these are the target of this form is, this form is a facility provided by the US government, or provided by the IRS to the people who are older age, who are senior citizens. So the next form is, so right now we are talking about the individual tax. Let me just put this here. In fact, let me just do this. Okay, so now the next one is 1040 X. Now what is 1040X? Now this is basically, it's a amended form of 1040. So for example, if you have filed the 1040 form and you have made any mistake, for example, in terms of reporting the income, in terms of reporting the credits or deductions, anything, any mistake that might be done by you in your original form of 1040, then what you can do is you can file 1040X. So this is basically a form when you are filing the amended tax return. So this form will be used, you'll be using, and you'll be filing this form. So now this is all about the individual tax. Now when we talk about the business tax, let me just put this here. Now the first form in the business tax is 1065. Again, you are not going to read this as 1065 or 1065. This is 1065. Now this 1065 is basically It's a form, it's a return for partnership income. Partnership income. So what does partnership income means? It is used by the partners to report their income, their expenses for occurred in a year for on that partnership. Now remember one thing, this is basically called passed through, passed through, sorry, passes through the partners. So what happened in this scenario is that, for example, there is a partnership and there is consist of three partners. So what happened is they had the partnership, and let's say they reported the income of let's say $1,000. Now this form will only be used to report this income, $1,000. This is not the form to pay the tax. What will happen is, since it is called passes through the partner, so what will happen is that since this is 1000, let's make this 100 $900. Now there are three partners, so what will happen, each partner will get $300. Now what will happen is that on the individual form of 1040 they will report this, and then these will be taxed at the individual level. So there will be no tax on this amount, $900. This form is only used to report the income of partnership, not the tax. The tax will only be calculated on this individual level on $300. Each partner will report this in their individual tax return, and then at that level that $300 will be taxed whatever the percentage is applied. Now there is a schedule for this which is called schedule K1. Schedule K1, again, it's a term, it's a schedule that is used by the partners to report their income from the partnership, not the tax. So this is what 1065 is used. Now, another form, when we talk about the business tax, another form that we use is 1120S. Now 1120S is basically, it's a form that is used by the S corporation. So what is meant by the S corporation? Again, this is also called pass through entities. So what is meant by this? It is pass through shareholders. Same idea which we have this on 1065, same idea here. No tax will be charged on corporation level. So what will happen is each partner will report their income, the total income on their corporation form. Again, schedule K1, again schedule K1 will be used. Each partner will report the same thing, the same income on their 10 11 20 form, and then on their individual form, which is 1040, it could be 1040, it could be 1040 NR, it could be 1040 SR. They will use that form, and then they will report their income, and then at that level, at an individual level, it will be taxed. Both, this is why both of these are called pass through. This is called pass through entities or pass through shareholders, and this is called pass through the partners. Now, one thing, so an easier way to define this form is, so basically this is the corporate version, corporate corporate version of form 1065. Corporate version of form 1065. Now the last one is the 1120 form. Only 1120, not 1120S. Now what is meant by this? Now this form is basically a C corporation. Now what is meant by C corporation? This will be charged the tax both at the corporate level as well as the individual level as well. Individual level as well. So this will be charged at the corporate level as well, and this will be charged at the individual level as well. S corporation is mostly used by small to medium businesses, and this is normally used when we have the large businesses, the companies, large businesses, large business empires. So that will be charged the corporate level at the corporate tax will be at the corporate level as well as the individual level. And one thing which is very important, even if you are a corporation, C corporation, if you are registered at C corporation, even if there is no taxable income in a particular year or in a particular season, still you must file 1120 annually. This is the requirement of the IRS. Now, let me just give you an example for this 1120. I have given you the example here for the partnership level, and for the C corporation you can apply same example here as well. But now at this level, now again, say for example, let's just write an example here. Let's say for example, there's a company which is earning 100,000 net income. Now this is net income. So what is mean by net income? Income after deductions, income after uh, credits, income after expenses, each and everything has been deducted. And this is the net income that is going to be distributed to uh, the partners. Now, since it's a C corporation, let me just give, this is ABC C corporation. Now, since this is C corporation, it will be taxed at two levels. So, for example, the first level, let's say 21 percentage at the corporate level. So, what will happen is you will this multiply by 21 percentage. This is the tax. Now, what will you do is this, then this. Now, this is the income that will be distributed among the shareholders as a dividend, or whatever name you can give, as a profit sharing or as a share of profits. This will be given to the individuals. Now, this again will be taxed at the individual level as well. For example, let's take an example of 15 percentage tax here. So now what will happen? This multiply by this will be the tax as well. So what I mean to say here is that this will be charged at the two levels, one at the corporate level, another one at the individual level. And this is the reason that this is called as double taxation. Whenever you hear the word of C corporation, you will also hear the name of double taxation. This is why this is called as double taxation as well. Now, once you have all the you have all the data and you have filed the form, now the next question is, are you going to file your return directly on IRS website? So the answer is no. So what IRS do is that IRS has given the rights to some of the companies to process the returns. And these some companies are, for example, ProConnect, for example, Drake Software, for example, Turbo, and they will charge you some kind of fees. Now you will file your returns on these softwares, and then this is connected with IRS. Ultimately, your return will be submitted to IRS. You are not gonna directly file your return to IRS. Remember, I'm talking about the online return submit. And if you are going to file the simple forms, like for example, 1099 forms, there's a separate story for them. For now, I'm talking about these forms. So you will use these softwares, and then they are connected to the IRS, and ultimately your return will be submitted. So that's the brief US tax structure. I have tried to make it very brief. There are hundred of forms when it comes to US taxation. For example, there is 1099, 1099, NR 1099, 1099. There are hundred of different miscellaneous. 1099 miscellaneous is another form. So there is W2, W8, depreciation form. There are hundred of different forms which are the part of the US tax structure. And obviously you cannot remember the names of each forms or each schedule. Schedule C, for example, Schedule C is very important in 1040. If you are getting any interest, or if you're getting any income from the other sources, you are gonna report that Schedule C. So there are hundred of schedules, hundred of tax forms, and you are not gonna remember the name of each. But that's the very simple structure for the US tax structure. Now, as I have told you, this video will take a little bit longer than our previous videos. So if you find this video helpful, and if you have any questions, do let me know in the comment box. And if you have any suggestions, any advices, do let me know in the comment box as well. Thank you very much. Bye for now.